Hello, everyone. Jeffrey Nance here again. Welcome to another edition of Tip Tuesday. We started a series on different trading styles. We're going to continue that series today. First week, we just looked at how volatile the market is being here in March of 2022. Last week, we looked at day trading. So we defined what day trading is, some of the pros and cons of day trading. And this week, we're going to look at what Tradeway teaches. And essentially, if you were to define what we teach, it's essentially labeled as what they would call swing trading. So, what's the idea behind swing trading? Well, much like a kid on a swing, you're kind of catching movement from one side to the next, right? So, for us, it's not necessarily one side, it's one bottom to one top. So for us, it's support to resistance, resistance down to support. Then, of course, we have a number of different strategies that will enable us to take advantage of these different moves from the bottom to the top. So support to resistance. And when it comes to this idea of swing trading, one of the things that makes it more appealing to people than day trading is the fact that you aren't necessarily going to be in and out of a trade every single day. So you're not sitting there, you're not tied down to your computer. Now, certainly you're welcome to do that if you want to. It won't necessitate that you be sitting in front of your computer. Why is that? Because most of the time, your trades are going to take between 2 days and maybe 2 weeks. Now, 2 weeks is probably on the high side for what most of our trades are going to look like, especially in this market where we're seeing a lot of movement, but a lot of movement very quickly. So the move from support to resistance is likely to happen fairly quickly. So you're looking at, maybe somewhere between 2 days to 2 weeks. Now, 2 days may seem fast for some of you, and indeed it's pretty fast. Certainly, if you're coming from a mindset where you're a buy and holder, so more of a long-term investor, which, by the way, we're going to talk more about next week. So certainly, if you're coming from that mindset where you're just like, man, I bought a stock and I just held it, and I held it, and I held it, and I held it, and I'm like, you know what, Jeffrey, that was 10 years ago, 20 years ago. I'm still in it. We'll talk about that some more next week. We'll talk about the pros and cons of that theory next week, because there are some upside and, of course, some downsides to that as well. So what are some of the pros and cons of what we call our swing trading? Well, one is there's some flexibility. Okay. So you're going to need a chart because, again, if you're going to understand where a stock is in its pattern, you're going to need to understand patterns. So that may necessitate that you're at some of our seminars learning these different patterns, and getting to a place where drawing lines becomes something where you find yourself being fairly proficient at doing. That is kind of a big deal. Obviously, if you're trying to buy at support, you need to understand what support is. So is that an actual line that you've drawn? Is that an exponential moving average? Of course, when we say is it a line that you've drawn, we're really looking for movements that the professional traders are making with their buying and selling decisions. So that's what we're looking for. So a couple of things that you're going to need. You're going to need a chart. You're going to need a good understanding of how to draw lines. Trying to draw lines as accurate as possible is a plus. And then understanding movement over time. So about how long is my stock going to take with, its general moves to get from its support area to resistance. And then the other thing that you can do, which is a pro here, I would say, in favor of this style of trading, is that you don't have to sit there and monitor it all the time, because you can use alerts on your phone or on your computer, or you can set actual stops. So you can use your broker to set stops and just say, look, if I thought my stock was going to move from, we'll just say $21 to $24. But instead of moving up off 21, it actually dropped below that. Well, you can just set a stop market and essentially it'll stop you out. So, whether you're sitting there watching that trade, whether you're praying over that trade, whatever you're doing, just sitting there staring at it, trying to will it to go your desired direction, you're not really impacting what's happening with the direction of the stock, because that is directly tied to the buying and selling of that stock. So we don't want you to sit there and feel like you've got to be in front of your computer all day. One of the reasons that we're trying to do what we're trying to do is to create opportunities for you to have time freedom. We had a student today that just wrote in, and he was at some kind of wet and wild type thing, just Hurricane Harbor or something. I don't know where he was, but he was out on a lazy river, and he was like, "I just got into a trade floating out on the lazy river," and I'm sitting here going, "Yeah, that." Now, that's how to do it, So you're sitting here, and if he wanted to, and it would have triggered, he could have gotten an alert on his farm and just on his phone, and then gotten out of that trade. Tomorrow, I don't know if he's going to be doing the same thing tomorrow or what. But I remember making trades just sitting in line, at Six Flags, just looking at my stock. Oh, it hit my price point. All right, go ahead and sell that thing. So it does create the ability for you to not be tied to your computer and just sitting there staring at a stock and watching it move up and down all over the place. Plus, it gives you some real idea as to what your actual plans are. So if I'm a buy and holder, the buying isn't so much of a big deal, right? So you obviously want to try to buy low, whatever you identify as a low point. The problem with most people when it comes to buying and holding versus swing trading is they really have no idea when they want to get out. So it's just like some random price. Like if the stock reaches this price, I would sell. So, and then they may or may not, because then it hits that price and like, well, now that it's this price, it's going to go up again. So I'm not going to sell now. So then they find themselves kind of in this, trade for who knows how long, because they have no real plan to exit that trade, because they have no real price target, because there's no real design to the trade. They're just hoping to get in at some point and then, sell at some point, which again, when you think through the simplicity of that, obviously that's nice, but there's no real plan. So it's really hard to execute a plan if you don't really have one. So we're looking for something that's going to help you have a little bit more of a plan. You should have an entry target. You should also have an exit target, whether that's your stop out or you hit your sell point. So unless the market turns and your stock follows it, then you should try to stick with your trade. So again, if you have these alerts or alarms, you can kind of monitor this thing while it's doing its thing. So you just sit there, and while it's going up, you just kind of hopefully watch it continue to go up. And while it's dropping, you sit there and you wait. And either you're in a trade if you know how to take advantage of stocks while they're dropping, or you're sitting there waiting for it to hit support again, which is like a trampoline. It hits that thing and then bounces up again. And now you're like, okay, let's go hop in again. So it allows you to have a plan. It allows you to have price targets. And it also allows you to say, look, I don't need to sit here and stare at this thing all day, because it's either going to do whatever it's going to do, whether I'm watching it or not. Yes, we do have a tendency to think that the stock does pay attention to what we're doing, right? We got this connection somehow, but that's not really how it works, even though it may feel like it at times. But we want you to have time freedom. We want you to have a plan. And so understanding, hey, I'm buying at this point, I'm planning on selling at this point. If it works like I intend, then that gives me freedom. I don't have to sit there. All right. So if it does it, I execute what I predetermined to do. So it allows you to have this idea of planning involved in your trade. And then, of course, if you're going to make money on anything that you ever buy, it has to be sold at a higher price. And this is true whether we're talking about a computer, whether we're talking about a stock, an option, whether we're talking about a house, a car, dirt, a phone. It doesn't matter. Anything you buy, if you're going to make a profit on it, you have to sell it. Because if I just sit there, let's just say some of you guys have like baseball cards, or from way back in the day, you used to collect them. I've got a bunch, and it's like, they're just sitting somewhere, right? And it's like, well, have I made any money on any of those cards? No. Why? Because they're still sitting in a closet somewhere. So it doesn't matter whether or not some of those cards have increased in value. Some of them might have increased in value significantly, but you don't make any money on anything that you've bought until you sell that thing. So one of the things that we're trying to do with our idea of swing trading is help you to realize, okay, listen, if the stock is going to move, then you need to have a target, you need to have a plan, and you need to sell that thing, because selling it is when you actually bring in the money. And then if it's doing, what you think it's going to do within its pattern, now you can choose, okay, all right, so it went up from support, it hit resistance. Now I waited, it dropped back down to support. Do I want to go in and buy it again? Well, if you've already sold and you've already taken in some money, now you have the ability to reinvest that money again. So now if you wanted to, you could go buy more shares. You could get in for a similar type move up the next time, but you'd be able to make money on a more consistent basis. Whereas the buy and holder, is planning on making money, but it's like somewhere in the future and they don't have a definitive plan. It's just kind of like a, maybe, so we're trying to help you create a definitive plan without having to sit there and just stare at it the whole time. So the idea of swing trading, which is what we teach here at Tradeway, again, allows you to take advantage of movement in the market. But normally it's a few days to a couple of weeks. Now, sometimes your stock will move faster than you anticipated. Is that a bad thing as a swing trader? No, guys, no, it's not. If you end up making money faster than you anticipated, I don't think any of us would complain about that. Okay. So if we get into a trade and we think it's going to take a few days, it ends up taking 1 or 2 days, fine. So be it. If it goes from support and hits resistance and we have to get out sooner, great. Great. It's not a big deal, right? If we have to stay in a little bit longer, right? And as long as we set it up where we have the time to do that, fine. We'll let it do its thing. But we're going to be in a position because we have a plan, because we're trading off of lines or moving averages, support and resistance to make informed trading decisions. And ideally, we would act on what we have already predetermined to do. And the idea of having a plan and then trading your plan is that you begin to take away some of the emotional elements to trading, which are inherent with trading. Like as soon as you put your money into a trade, you're going to be emotionally tied to that thing working or not working the way that you plan. So having a plan and then executing that plan can help you deal with some of those emotions. And that again is another upside to the swing trading. So hope that you guys have enjoyed this discussion today, learned a little bit more about what swing trading is. Again, it's movement from downward to upward, and you can do it over and over again, especially in the confines of a predetermined and predefined pattern movement. So if you want to learn more about this, check out some of the many opportunities we have, whether that's a step one or just all of our online content. We would like to connect with you, continue to help you as you go through this process. Yes, and we don't want you to get stuck, Benjamin. I see you over there with having unrealized gains, because listen, guys, like the baseball cards, if they moved up from $5 to 5,000, it matters not to me, right? Unless I sell, because now I can sell and make a lot of money. But if they're just sitting there in my closet and I'm just waiting on them to reach some imaginary price, then I haven't made any money off of them. And if I end up dying, passing them on to somebody else, then eventually at some point, somebody's going to need to sell those things for any of us to actually make a profit. All right. Hey, center field. I'm actually at a resort lodge in Arizona. Hey, cool. Nice. Well, there you go. Glad to have you with us and out there enjoying the sun, it looks like, and having a good time. So appreciate you guys. If you have any questions for us, let us know. Thanks again for joining us for Tip Tuesday. We'll see you next week when we talk about long-term investing. And what I'm going to do is I'm going to have a couple of stocks, and I'm going to show you what's happened to those stocks over time. So again, we're going to look at some pros and cons of long-term investing, because we don't talk much about long-term investing. And I'm going to talk to you next week a little bit about why we prefer swing trading. Obviously, the faster nature of the trades without having become a day trader is appealing. But outside of that, we're going to talk a little bit more about the pros and cons of long-term investing and why some of you guys might want to consider doing longer-term investing with at least a portion of your money. But for most of you, what will probably help you realize is, okay, all right, I need to have a plan. I like the swing trading idea, but in order to execute that, I've got to have some skills. And that's really the biggest difference between somebody who's going to be an effective swing trader and somebody who's just going to kind of do long-term buy and hold, is that they do have knowledge and skills and an understanding of what their stock and the market is doing, how those things are tied together, and their ability to make informed trading decisions because of their knowledge and understanding of the stocks, the charts, and the market tone. Well, guys, thanks for being with us. We'll see you next time.